Let's invite the management of Nazara Technology on the show now. They too released their Q2 numbers. Q2 has seen a growth of 104% on the top line. Margins, though, have seen a drop to 5.2%. The company has gone ahead and up to the FY23 revenue guidance. They're now targeting the top line for FY23 to come in between 70 to 75% with EBITDA margins of 10%. Nitish Mittersain, the joint MD at Nazara Tech, is here with us on the show now. Nitish, morning, and thanks so much for joining in. This is Rima here. Happy Diwali to you first, to your family and everyone at Nazara Technology. Can we talk about this guidance upgrade? What prompted it, and what will be the contribution of AdTech, to this top-line growth? Because that's the new addition.
Sure. So, as you know, we have multiple, engines of growth. We operate in different business verticals. And all around, we've seen good growth opportunities this year in the first half, especially as you see in our Nodwin business, our esports business has grown well, our freemium business has grown well. So we've been fortunate to get many growth opportunities. We have kind of accelerated and reinvested a lot of our margins into this growth. And that has allowed us to, I would say upgrade our earnings or our revenues from 50% earlier guidance to 70 to 75% this year. For us, the big thing is, in the verticals that we operate, especially in businesses like esports, which are nascent businesses, we are already market leaders there, and they are going to become large businesses. We really want to accelerate our dominance in these spaces, and therefore investing for scale, investing for market leadership is far more important than trying to maximize margins today. And that's exactly what we're doing. At the same time, our philosophy has always been that we will not grow by burning money. We will not grow by losing money. We will generate profits. We will generate positive cash flow. And that's how we are, executing on our end.
Right. Hi, Nitish. Good morning, and thanks for joining us. This is Pavitra, and happy Diwali to you and your entire team and family. You've taken us through the revenue guidance overall. Can you take us through what the individual verticals are likely to see in terms of revenue growth? If you could break it down for esports, for gamified, because gamified has also picked up after 2 quarters now.
Yes. So I think for this year, if I were to talk about the top drivers of growth, I think esports is definitely going to be a #1 driver. We have 2 companies over there, Nodwin, which does the esports tournaments, esports content, and then we have Sportskeeda that does esports and regular sports news. So both these companies are firing very well for us. We also added a gaming accessories business in the esports segment under the Wings brand, which has done extremely well during this Diwali festival season on the online marketplaces. So we are building this entire ecosystem around esports, and it's growing very well for us, and therefore it will be a strong driver for us. Now, coming to Kiddopia, as well as our gamified learning space, right? As we spoke many times earlier, it was impacted by the Apple privacy changes, but I think we have stabilized there. We've taken a price increase. We've stabilized our subscriber base, and you will start seeing that grow again. And thirdly, our AdTech and freemium businesses we expect will also scale very fast this year. There's a huge opportunity on the AdTech front, which we've entered. The company is doing very well. Our freemium business is small, but a huge opportunity to grow from where we are. So we have 3 or 4 growth drivers for this year. And I think, we should comfortably meet our guidance.
Hi, Nitish. Morning. For esports, what is the reason that you have seen this, drop in your margin despite a revenue growth?
Yeah, so, we've not really seen a drop in margins, but we have used our margins to reinvest in certain IPs and certain brands that we are, building, like gaming accessories. So, for example, the Wings brand that we have launched in the gaming accessories space, as you know, this whole Diwali season is very important. That's a peak of the whole year, and therefore, in this quarter, we've aggressively invested in creating that brand and marketing that brand. So, I would say there's a way to look at adjusted margins, but we don't like to do that. The second thing, as a company, we very rarely do any capitalization. We OPEX everything out. So the way to look at it is, we're kind of reinvesting our margins in the esports space to grow faster.
Okay. Just want to get back. I missed the number. How much will AdTech contribute? I think this quarter it was about a 35-36% quarterly revenue. Is that the run rate for the rest of the year? So should we expect 100 crore plus kind of a revenue from AdTech?
Yes, AdTech will be 100 crores plus this year.
Okay.
And will be between, I would say, 13 to 14% of our revenue. So it'll probably be a little larger than 100 crores.
Yeah, 35. Even if you do 35, it will be larger than 100 crore. Can you talk about the advertising and promotion? That's seen a pretty sharp jump. In the first half of the year itself, your advertising and promotion revenues have gone up by nearly 50%. So that's clearly made a big comeback. What's the expectation from the rest, and what's driving this?
So I think the line item you're looking at is actually advertising and promotion costs and not revenue.
Yes, cost, sorry.
Yeah, but I think 2 or 3 things are driving it. One is with Kiddopia coming back into growth phase, we are now able to spend more money to acquire more users. We spent $3.1 million in this quarter at a cost per trial of $37.9, which is something very acceptable to us now, especially after the price increase we did in the last quarter. So I think that's one element. The second is, we created this Wings gaming accessories brand that we have promoted quite significantly. We are spending money building some of our IP brands. So I think a lot of the advertising and promotional costs have increased because of that. But a lot of these are creating IPs and value for us for the long term. So we are happy, very happy spending this money.